Welcome back, crypto enthusiasts. Today we are diving deep into the world of MATIC cryptocurrency, digital asset that recently experienced significant drawdown amidst what was once a robust uptrend at the market right now undergoes its natural ebb and flow, and investors are left questioning the potential for a triumphant comeback. So the question is for today for us to answer whether it's just a temporary setback, or could MATIC be gearing up for a resurgence that could take it to new highs. So as we are right now amidst the very hyped crypto environment, especially for altcoins, the hopes for the great comeback are here. But what this data is saying underneath the structure, and what the technicals also giving us a hint about it. So thank you very much for tuning in. That's Wall Street Station channel, and I'm just getting you for this ecstatic journey of investing and finding out the edges and looking for the edges on the investor's side. So let's jump to our first element. So what's next for Polygon? Right here you have a chart of how the Polygon really works in comparison to Ethereum. So let's get back to the square one. Ethereum blockchain that has been founded back in 2014 has faced significant limitations on its pathway with a throughput of around 14 transactions per second and escalating gas fees, especially during times of network congestion. And this problem, this limitation, is posing a considerable barrier for users, particularly the decentralized finance, also called DeFi. So that's also something that we were betting was this ease in non-fungible token transactions that also suffered a major bottlenecks due to the limitations of this technology. So Polygon is trying to bring the investor side and user side to the new level, the possible game changer in the blockchain space, and alleviate the scalability and cost issues of Ethereum. So it is employing scaling solutions, primarily processing transactions on side chains, even up to 65,000 transactions per second, and also lowering the fees to make it more usable. So with that being said, what's laying underneath is this very high leveled up structure, technological structure that is allowing the users to some extent using this very hyped plasma sidechains, proof of stakes, and blockchain bridges and ZK rollups, as well as with optimistic one that making the whole structure full of flexibility, and that also pushing many of the crypto enthusiasts toward the side of a Polygon in comparison to other blockchains. So we will just jump through what right now is underneath the structure with the emphasis on addresses by time held. That will show us whether what's the tendency inside of the structure, and also the developer trend. That's also very important to find out what's laying underneath. So as we can find right here, the holders are scoring higher on, and with that increasing amount of holders, we can be a bit more certain about the future of its structure. And with 51.5%, we are getting more confident that this overview of investors right there is more tilted toward a more far-fetched tendencies. So there are some, however, undercurrents. What I would find right here, it's the cruisers overall that are setting a very high large of the overall structure. So 45 of those traders that are just popping in and popping out is still something that we shouldn't really be at observation. But anyway, what I find that with this technological improvements, this environment for those investors to stay for longer is becoming more welcoming. So that's obviously fine tendency. But what about the developer trend? That one is rising, especially with a large spike back in the second quarter, the beginning of second quarter of this year, and that was somewhat intersected with this introduction of the new type of a network that's called MATIC 2.0 that we'll talk about in a moment. We can also observe that overall security of a structure is by CERTIC being notched at 93.5, so that's also boding well for the whole blockchain. Let's look at the metrics underneath. What I also very often point out is that the tokenomics of the structure is the overall determinant whether the token is more prone to get soaring throughout the bull or bear market. Right now, as we are going through the local bull market, this tokenomics doesn't really pose that much of a weight, but overall that's in the longer time horizon, that's very important. And we can find that this inflation takes place, but with 2023 to come, right now we are almost at a very stable type of the inflation. That means that the whole of the supply of the structure that was about to leave this MATIC train has possibly been just thrown out to the market already, and this supply pressure may fade away in the coming bull cycle. So that's also posing very well for what may come in 2024. But let's find out what's the number of new addresses and this MATIC sending addresses are telling us. And these charts are telling us that Polygon's recent partnership announcements and network updates surrounding the POL token migration have generated widespread investor interest, and we can find that there is a much of the overlapping interest between buyers and sellers. So usually it looks like the accumulation after the downtrend, and I don't really find her here, and I think that may pose a stark warning for investors. However, this type of a tendencies will be fine if it will even higher re-emerge, and we are right now tiptoeing around the bull market on the crypto space, and that may eventually boost the sentiment even further. So right now I'm finding that's a positive overall, but still we need some confirmation after this austerity been going through on the crypto market throughout 2022. So what about the Polygon versus its peers? Underneath the structure, Polygon ZK EVM, that's a leading ZK scaling solution right now, giving and showing its power throughout the larger amount of the funds being just here deposited, and we can see it through many of the blockchain structures and throughout many tokens. When it comes to rating breakdown, we can find that Polygon is somewhat even better than Solana. That is one that is much more hyped recently, and that's what many investors may eventually get grown up to, is this choose Polygon over Solana. However, Solana has a greater marketing, so therefore in 2023 that was the one of the token that has been pushed a little bit higher, but it may change in the coming year. So looks like the whole environment looks like that the current behavior of a token looks like being a turmoil engulfing and may pose well for the next to come. So MATIC 2.0, that's the solution that is about to entail some investors' hope, and we can observe it right now. So this Polygon advance with POL token paving the way for this upgrade that initiates on Ethereum mainnet, marking a major milestones, and that enables literally to give a native free staking protocol for a zero knowledge based layer 2 ecosystem. So that's more like the dividend type of a structure where there is more incentives for holders to hold on to the token. Also, POL holders gain versatile roles across multiple chains right now, ushering in Polygon 2.0 upgrades by launch of this upgrade. We can find that there is more type of staking layers and more upgrades toward the ZK rollups and advanced interoperability. That's what we are really been awaiting for, and that may push the token even higher. And with this mainnet been just delivered yesterday, we can find that there is even greater hope for higher efficiency and the decentralization, and that's a very important milestone that has been really delivered. So that's for the community, that's very crucial anyway. So the MATIC has managed to stay steady throughout 2021 and 2022 bear market, so it may be eventually poised even greater and been set in a greater position to start the new bull market that is seasonally being set somewhere for 2024 after supposedly Bitcoin's halving. So there is more also incentives for governance with Pol contracts and Polygon protocol council. Right now we are anticipating dramatic improvements in the coming year, and we are very ecstatic of what may come for the token. But let's right now find out what's going on with the chart. As been observed right here, we are after the very nice uptrend with this sentiment reaching almost 80 points for MATIC, and with this open interest being heightened. However, right now the current situation looks like the metric has been resetted, and we need another spike of interest among users in this blockchain. Otherwise, we may have a very difficult time to get another uprise from here. But let's have a look at what's going on the candlestick chart on interactive platform of TradingView, and we can find right here that we have built this type of a rejection of a level of 0.72 with this daily candle back in 22nd of November been showing a real strength with a very low knot below the body. So it means we are rejecting this level and giving the bull another argument to go through this undercurrents and try to attack a new highs. We are still on the way to get through this resistance being observed at 0.8, and what may yet to become a reality is this going through this liquidity on 0.87. That's highly expectable after this head and shoulders pattern been negated. So with this nullification of this pattern and without a full development of the extension of a a head and shoulders objection to the downside, we may right now get through 0.87, and right after, if we have enough fuel, maybe another correction and the attack of the highs at $1. So what may hold a pivotal role here is this reaction, and we will stick to this, that right now shorting MATIC from here is somewhat unwise, and the future holds that we may get through a kind of a rally, unless the Bitcoin's bearish reaction will spoil the party somewhere in the in the beginning of December. However, seasonality shows that we should be posing for new highs, and even right after attacking 1.18. However, observe the candlestick patterns and how the volume reacts to current environment. All right, so we are getting back to what's going on the market. As we do know, we need to also analyze the macro outlook, and right now global markets are anticipating widespread interest rate cuts that may push the valuations of crypto even better on this enthusiastic flow of this sentiment driven type of a momentum. However, the global tightening cycle is unwinding, and that may eventually bring some potential for economic contraction, but I don't expect it to happen anywhere between this December and March. So the next few months may be somewhat positive. Following this finding, expected DM cash rate is getting below the median, and expected DM cash rate change in 6 months also is going downturn, but it may have a lagging effect on the stock market and crypto as well. So the fourth quarter should be fine, and I do expect the first quarter of the next year also to have a moderate returns, but not maybe that rally, such rally as in a fourth quarter, but still having a positive returns, at least in January. All right, so final thoughts and Q&A. That's the time for you. If you have any questions right here, you may pause it right now. So Polygon right now maintains its lead in some metrics, and also overtaking such leaders in the previous rally as its Solana, and right now we can find that there's an obvious regulatory concern for the network, but I do wonder that if an antagonistic SEC hasn't been priced in already, at least to some degree. Furthermore, BlackRock's ETF's spot Bitcoin proposal could be an indication that the SEC's actions regarding crypto are losing favor with power financial institutions. So that's it in today's episode. Thank you very much for sticking around, and as always, if you have enjoyed, hit this like button. That will be highly appreciated, and that will allow the channel to thrive. Thank you and have a great day. We are having another upload somewhere today or tomorrow morning, so stay tuned on our channel and subscribe if you have enjoyed this type